And good morning once again, options traders. Well, I got a good email from one of our traders in the group asking, how do you read a candlestick chart? And they can be a little confusing if you've never seen candlesticks before. And so I thought, let me just at least give you some of the basics on how to read candlestick charts. So before we get started, as always, please be sure to click like and subscribe. Definitely very much appreciated and helps so much to promote the channel. So candlestick chart. What it does is it simply gives you the open, high, low, close for a given time period. So for example, if you're looking at a day chart, then you are looking at the open, high, low, close for that trading day. If you're looking at a week chart, you're looking at the open, high, low, close for the week. If you're looking at a 5-minute chart, it's the open, high, low, close for the past 5 minutes. Now, of course, in a 5-minute chart, we don't really have a closing price, but it would be the last trade during that 5-minute window. So here's the way that a candlestick is formed. Let's say that the stock opens at $100. So if you were to sketch this out by hand, you would just create a little hash mark right there at 100. Let's say that the stock closed down here at 98. Well, we would create another hash mark. That would be the close. Or if the market was still open and the stock just happened to be trading at 98, it would be the current price. And so what you're going to do is to take the open and the close and connect them. And if the closing price is below the open, which it is here, it's a red candle. That's just how the candle is formed. We just create this body around it and we shade the candle in according to the closing price relative to the open. Now let's say that we have a high trade maybe up here at 101. We're just going to create a line that traces right up here that points to the highest trade right there at 101. We do the same thing for the low. Let's say we have a low of 97. We create this lower line that points down here to the low. Now these lines right here that I drew, the high and low, are actually called shadows. Today you'll hear a lot of people call them wicks, which certainly makes a lot more sense, but they're technically called shadows. This red area right here is called the body or the stick. It's just the stick of the candlestick. And so that's really just how easy it is to read a candlestick. Now, what if we flipped the open and the close? Notice that we still have the same high and the same low. It's just that the closing price was higher than the open. In that case, the candle will be green. So it's really just that simple. Notice that for a red and green candle, they could potentially share the same high right there. Those lines would line up right there, those shadows. If they shared the same low, these lower shadows would line up. But notice that on the diagonal, we get the opposite. The green candle, it is a close at the top. For the red candle, the close is at the bottom. On this diagonal, we get the opening trades. So for a green candle, the open would be at the bottom. For a red candle, it's at the top. So notice that the open and closes are reversed for the red and green candles, but the highs and the lows are the same. So what you're going to find once you understand candlesticks is they really give the same information as what's called a Western bar chart, more of a traditional type of charting pattern for the US. And it's going to look like this. Just a long stick like this. We have the high and the low at these endpoints, but we get these little hash marks. And the hash mark on the left is the opening trade, and on the right, it's the closing trade. If we got this for a Western bar, this would be the opening trade. Hash mark is to the left. If the hash mark is to the right, it's a closing trade. So you can see it's not quite as easy to tell if we had an up day or a down day based on these Western bar charts because there's no colors to them. Now, some of the more modern platforms will color these red and green according to whether the close was above the open or below. But many of them still show them in black and white, and that's what makes a Western bar chart harder to read. So for comparison, here is a green candle. This is the equivalent for the Western bar chart. Not as easy to tell if it's an up or a down day. Here's a red candle. Here's the corresponding Western bar chart. Give exactly the same information, but it's just not as easy to see. So that's really just the basics of a candlestick chart. Now, an important thing to understand is what candles don't show. So candlesticks don't show the price action during the day. If you have the same open, high, low, close, you will get identical candles. So technically, there are an infinite number of different combinations that can produce identical candles. So for instance, let's say that we have this candle over here on the right. We have these open, high, low closes. So let's look at one potential path. We open at 100. We have a low down here of 97, high of 101, and we close down here at 98. We're going to get that red candle. But notice that that is one particular path that gives us that red candle. We could have also opened at 100 and had this path. We still have the same open here at 100, the high 101, the low of 97, and the close at 98. So notice that the blue and red path give exactly the same red candle. And then finally, let's try a third one. We could open up here at 100, have some kind of crazy stock price path, but as long as we get the same open, high, low close, it will also produce this identical red candle. So when you're looking at a candle, you can't look at this high and say, oh, that occurred off the opening bell or midday or towards the close. You just simply don't know by looking at this candle. All you know is that this is the open, high, low close. Now, a final point of confusion for new traders is whether we have, let's call it an up or a down day. And it does get confusing because it depends on if you want to compare the opening trade to the closing trade, or if you want to compare the closing price to the closing price. So for instance, let's say that this is yesterday's candle here in green, and this is today's in red. Well, yes, we got a red candle because this is the opening trade, the top of the body. This is the closing trade. So that's why that candle is red. But how is CNBC going to report it? Or your broker's platform? They usually report it according to close to close. So take a look at yesterday's candle. Here is the close. Today's candle, the bottom of the red stick right here, is the close. So notice that today's close is above yesterday's close. So CNBC is going to report that the market was up, or that this stock was up for the day, but that's because they are comparing close to close. So you can see why it can be confusing for traders. They'll say, well, why is it up when the candle's red? And that's because, again, this candle is comparing the close to the open, whereas when we typically talk about the stock market being up or down for the day, we are comparing close to close. So when you get gaps like this, you can get what appear to be confusing signals with candlesticks. Let's try another one. Let's say this is yesterday's candle. So the bottom of the red stick is the close. Here's today's. Since it's green, this would be the close. So notice that if we compare the open to the close for today, yes, we get a green candle. The closing price was above the open. But if we look at the traditional way of comparing whether the market was up or down for the day, take a look at yesterday's close compared to today's, and we see that it's down. So once again, CNBC and your financial websites are going to say that the market was down even though you got a green candle. So I hope that gives you some of the basics of how to read a candlestick chart. You'll definitely want to learn them, and more importantly, learn your candlestick patterns, because you can get a lot of insights about potential reversals in the markets. And so for anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.